most startups fail because they're solutions seeking or in search of a problem and not the other way around.
Alrighty, hello everyone, and welcome to the Deal Maker Show. So today we have a really great founder, a founder from Latin America, and we're going to be talking about all the good stuff of building, scaling, financing. And they recently announced a very exciting round of financing, but also debt financing. So we're going to be able to talk about both, talking about two decision to transition from corporate to startups, as well as raising money, why and how you should think about picking your own investors and other great stuff. So really brace yourself for a super inspiring conversation. And without further ado, let's welcome our guest today, Felipe Gomez Herrera. Welcome to the show.
Thank you, Alejandro. Thanks for having me. Very excited to be here.
So originally born and raised in Colombia. Give us a walk through memory lane. How was life growing up for you, Felipe?
Well, very much born and raised in Colombia, so spent back and forth most of my time here, but I also spent a fair amount of time in the US. Very privileged in the sense that I had access to great education, but also a great environment, mostly in healthcare, which is where I ended up. So, being born and raised in Colombia, and then having unique knowledge about the healthcare issues that we face, sort of like open up what would be the rest of my career.
So then let's talk about politics. How do you get into politics? Because I know that politics, played quite a critical role, especially during the early days for you.
Yeah, so it was funny. Like I did not have, but I guess you hear this often in your show, but I did not have the typical background on where you would think somebody will end up in the startup world. I was a poli sci major in the U.S. What I wanted to do was public policy. That's where I thought where I would make the most difference. I was very quickly disillusioned by the public sector. That being said, kind of like that bug of service and about like broader impact stay with me. So that's when I decided to join the corporate world and later founding my own startup. I knew that what I wanted to do was having that double impact. It not only needed to be like a great business, but it also needed to be a business that would have a dramatic impact on the livelihoods of Latin Americans.
And we'll talk about that with Welli in just a little bit. I want to talk about you were alluding to corporate and how you transition out of the public to the private sector. McKinsey, working at McKinsey and obviously all this consulting sector. How do you think that shaped up the way that you think about problem solving?
I think dramatically. I often tell this story, but when I joined McKinsey, I had pretty much never opened an Excel spreadsheet. I had to learn that from scratch. So it was quite a steep learning curve for me. I was used to thinking about like public policy thinkers, about I don't know, world affairs and so on, and then just learning the basics of how a business works made a huge difference. But also I think the way a consulting firm such as McKinsey teaches young analysts like myself how to approach a problem, how to decompose a problem into more manageable parts, and how to really like tackle any problem regardless of industry or function in the same manner would dramatically change how I think. I used to be probably all over the place, and now I approach things in a more systematic manner. So I'm always thankful about my background and about the opportunity that I had working with in consulting and especially at McKinsey.
So then you go to Harvard Business School, and that seemed to be quite a shift of gears because that got you closer to really doing that transition from corporate to startup. So walk us through the sequence of events.
So I think, especially, I mean, obviously Harvard was like my lifelong dream, and once you get there, the imposter syndrome quickly sets in, right? So I was used to thinking about smaller problems coming from a smaller country, and I was never really exposed to kind of like people thinking about startups, thinking people thinking about like disruptive industries. I had never learned about, I don't know, crypto or like financial infrastructure or things like VC. That those things were like completely foreign, because even though I came from a business background in the sense that I came from McKinsey, I was doing mostly banking and stuff like that, which are not really that exciting or engaging in a way. So when I get there, everybody is thinking like, "What's the next big thing?" So I think for me, business school and HBS made a huge difference, especially in the sense that I was exposed to these like super interesting people that just really wanted to like do the next big thing and really change the world.
So then they talk to us about that thinking of, hey, maybe I can change the world too.
I think that's also an important thing, right? So the I think probably the most important learning or the most important skill that I like learned or gathered from my time in business school was just confidence, right? So you're there with people that are incredibly bright, incredibly driven, and then also like very well rounded. Now I thought I was gonna ended up like being classmates with a bunch of geeks, socially awkward, that were just like really great bankers, and that really wasn't the case. Some of my really best friends are come from business school, and then once you're there, you really just like really buy into the thinking that you can do that as well, right? And then that's when my mindset shifted from like, hey, I'm gonna be this consulting partner at McKinsey, Colombia, or whatever, to hey, maybe I can start my own thing and really make a difference, and then do something that I think it's more exciting and meaningful.
So then talk to us about taking the plunge. What needed to happen? How did the whole idea of Welly come knocking, and how do you go about deciding to take action? Because it's quite the jump.
Yeah, so I think that was really tough. I cannot take the full credit, to be honest, because I was working then at Shopee, very large e-commerce from Singapore, and then Shopee decided to close down operations in every market, with the exception of Southeast Asia and Brazil. Right, so I was there. I was launching the company in Colombia. We're doing quite well, I believe. We had, I don't know, 300 plus employees, and then all of a sudden, they decided like this is gone. Um, in the in kind of like in a positive note, I also had like 6 months of salary, and I could do whatever I wanted for the next 6 months. So that was kind of like a great way to get rid of the golden handcuffs, as they say. So with my partner, which whom I met at Shopee, we said like, hey, let's do something. We're not gonna take any interviews or job offers in the next 3 months. We're just gonna come to the office because we still had an office back then. We're gonna come every day. We're gonna do 8 to 5, and then we're gonna think about ways we could, I mean, things that we can do that will not involve us coming back to the corporate sector. So I had come from a family of doctors, as I mentioned. We kind of knew the model. We knew the problem for sure. That we knew that there was a massive problem of access to medical procedures in Latin America. We knew that there were similar models in the US that we had seen, the care credits of the world and so on. And then we realized pretty quickly that there was nobody doing something similar in Latin America, right? So that's when kind of like it clicked. So it was a combination of factors, but it was tough. Like I cannot take full credit again.
So then, for the people that are listening to get it, what ended up being Welly? What's Welly?
So Welli, in a nutshell, aims to provide access to healthcare to millions of Latin Americans. The way we go about this is that we want to become the financial partner of both clinics, doctors, but also patients, by creating sort of a full ecosystem of financial products for the healthcare sector, which should resemble a lot like the bank for healthcare. That's kind of like the quick short version. We want to become the bank for healthcare. What does that mean in very practical terms? So the first horizon is that we do patient credits. We partner with doctors and clinics. They become our distribution channel, and whenever a patient comes through the door to their point of care, and then they cannot afford a procedure, we provide a digital financing option which takes 2 minutes, and we disperse directly to the doctor. So they become our distribution channel. Our cost of acquiring patients is actually zero because doctor pay us for this financing solution. We're now launching Horizon 2. Horizon 2 is that we're gonna finance doctors and clinics themselves for equipment credit, but also for capital requirements and so on. And then the last horizon, which is sort of like the bank element to it, is that we're going to provide other non-credit solutions such as payments, disbursement accounts, and so on for doctors and clinics. So that's kind of like the whole pathway for Welli.
What was that moment like, Felipe, where you guys realized you were into something here?
So I think we're pretty lucky in the sense that we never had that moment of like, hey, we might need to pivot because we don't see traction or we don't see sort of like product market fit. I don't know if what would have happened to me. There was quite a lot of stress without having that sort of pivoting moment involved. Um, but like from day one, there was more demand from patients than what we could afford given the funding that we have, right? So doctors said yes very quickly, so they were losing patients. So every single conversation or most conversations with, I don't know, small clinics, small dental practice, a plastic surgeon, fertility practice, or so on, ended up in a yes because they said like, hey, I'm losing patients, and my mission is to provide more access. And then very quickly, I think first month we probably had about 1,000 applications, and then we barely had any cash, so we could disperse, I don't know, probably like $25,000 in credits. So say we said like, oh, I mean that this is really a problem, this is meaningful, and then we just need to have a better product and then have more capital in order to meet that demand.
So then, talk to us too about the capital side of things and how you guys went about financing the business because you recently closed the Series A. But walk us through because in Latin America, it's not as simple. It's a little more green. The way that you think about financing your company. So how has it been? For you guys too.
Yeah, so I think so we had this discussion very early on, or whether we would go to like take the VC route, do this full race and so on, or we would just like do sort of like more of a take it slow, bootstrap sort of model. I think we were erring on the bootstrap model, probably naively. We came to the party quite late, so we started in November 2022. So that's when the markets were really at a tough place. But we realized pretty quickly that given the capital intensity of a financing business, we would need to raise from VCs, right? So very early on, we realized like, hey, we need to take the VC route. It's a terrible moment to take the VC route, but for us, we've always seen capital as like an habilitator for impact, right? It's not the end in itself. And then there's this a lot of vanity metrics going around. But for us, capital allowed us to build a really great product that would add value, right? So that being said, it wasn't easy. Initially, it was mostly friends and family, but it was a lot of capital for friends and family. Um, and then we graduated probably a year afterwards to VCs, and then it's been A bit easier since then, but still a constant struggle, right? Which I can tell you a bit more about, but it's always a core component of our business, given the capital intensity of our core undertaking.
How did you go about picking your investors?
To be honest, at the beginning, you don't really pick. I think whoever says you're able to pick, I mean, either they're in a massive, like, hot AI company or very well connected in Silicon Valley or so on. Initially, you'll take what you can get within the, I don't know, moral and ethical limits. But afterwards, I think, and then this might sound cliche, but you probably look for three things, right? I think one is alignment in purpose. I mean, for us, it was healthcare access. That's a clear purpose, and then not every VC will be fully aligned with that. Two, which is fairly obvious, is that you want more aggregate value than just capital. I mean, capital providers you'll find a ton, but people that really add more, and then this is true also for VCs, is not that common. And then lastly, which I wouldn't underestimate, is like a connection at the personal level. No, you're this is a marriage. You're gonna spend a ton of time in the ups and the downs with these with that with those people, and then you wanna have somebody that you wanna spend time with. I think, I mean, it would be that easy for me, which is all, again, not always obvious and not always the case.
So on the debt side, because you guys have raised, this capital on the equity side, which I believe is about 15 million, then you've raised about 100 on the debt side. So on a business like this, how do you think about equity versus debt? And also, what's the journey and the process of raising debt as well?
Yeah, so that was probably the biggest learning for us. I think when you think of startups and then you think of VCs in general, you always have like the equity hat on, and then you think like an equity investor. But for us, it was equally important, or perhaps even more important, to just have access to these very large debt facilities, right? And it became a chicken and an egg problem, right? So on the equity side, the equity investors, one, I mean, I would say they wanna have clear knowledge that you're gonna have access to debt, but also they don't want to use equity dollars to pay for credits for financing, right? They always think like, hey, my equity dollars are worth a lot. You should be building like a great product with it. You should be hiring tech and so on. I don't want to use that money for lending, right? And on the debt side, the incentives are completely different, right? They care about the downside more than the upside, and then they want to see traction because they want to see performing credits, longer running cohorts, and so on, right? So the debt holders need equity, the equity holders need debt, and how do you solve for that? So that was a tough one for us, and I think it's a tough one for any company doing credit. And for us, the solution was, I'll do friends and family first. I'll go for small deadlines, mostly with local banks. And hopefully that will catapult ourselves to having first a large debt facility, which will then unlock the equity. I don't think that's a straight path. I don't think that's the same for everybody, but it's a tricky chicken and egg problem again, that not every startup faces. But we one that we need to navigate pretty much every single day.
And talking about navigating, how do you see the process too of navigating the fintech side of things for fintech startups, let's say in Latin America, because you have not only the uncertainty of building a startup, but then also you have the uncertainty of innovating in a heavily regulated environment. So, what can you tell us, and what can you say to perhaps other fintech founders that are tuning in that are also in LATAM right now?
Yeah, I would say, I mean, everything is working against us, right? I think the fundraising environment is not helpful because you have a lot of volatility. You don't have a lot of success stories, large exits, and so on. So on the fundraising, that's tough. I think on the regulation, as you mentioned, there's again a lot of uncertainty in a heavily regulated environment, right? So, for example, in Colombia, you have regulatory caps in the amount of interest that we can charge, and that dramatically changes our business calculations, our unit economics, and so on. Plus, you have the additional problem of not having large enough markets. So, compared to the US, you kind of have to be born as a multinational company because just being present in Colombia is just not going to cut it, or being present in Argentina, or perhaps with the exception of Brazil, it's not going to cut it, right? So I think in a way that scarcity and that uncertainty probably leads to better companies, right? So we need to be very mindful that the unit economics have to work from day one, that there might not be another equity round, that we need to build up buffers in every single assumption because the regulation might change, and then it changes every single day, and then the I don't know, the forex dollar to peso exchange rate might change. So I think that builds resilience, and in turn, because there's probably so many of us, so few of us, apologies, um, that might lead to outsized returns for equity investors. I think that's the upside when you talk to an investor that's considering getting immersed into that this kind of zoo of Latin America.
So obviously, Latin America, you have different countries. There's also different languages too. How do you guys think about expansion? As well, because I mean, every country too. They have their own systems, their own jurisdiction, their own laws. Tell us about this too.
Well, I wish I had better news for listeners that are thinking about doing this, but it's sort of a mess. I mean, if you're born in as a company in California and then you want to go to, I don't know, Delaware or Idaho, it's gonna be pretty much the same thing, right? That's definitely not the case in Latin America, where you have, other than language homogeneity, with the exception of Brazil, there's not a ton of similarities, right? So we're now expanding into Peru. We picked Peru as our first destination, one because the largest business conglomerate of Peru, which is called Credit Corp, invested in us. But then two, because our problem of healthcare access in Colombia is even larger and more prevalent in Peru. The out-of-pocket expenditure in Peru is close to 30% compared to 17% in Colombia. Um, but it's like starting. So we've been at this in kind of like our soft launch in Peru for about 6 months now, and it's like launching a company from scratch. Some of the lessons learned are replicable and applicable, but a ton are not. So you really need to push through. And then we have to do this also knowing that Peru is the next destination. But if we want to build $1 billion company in Welli, we probably need to go to Mexico in a year or so again. So we need to start all over again.
Amazing. So, Felipe, imagine too, as we're talking about expansion, as we're talking about investors, because we're talking about vision too, no? And you go to sleep tonight and you wake up in a world where the vision of the company is fully realized. What does that world look like?
So I'd say a few things. I think one, our main and obvious goal of providing access to healthcare access to millions of Latin Americans is true. So in Colombia, in the first 3 years, we've received about 300,000 applications, which is a lot, but it's still far from where we want to be. I think that's one. I think two. we are really that company that provides kind of like a one-stop shop financial solution for doctors and clinics. So the doctor comes to the office, they will bill their patients using Welli. They will charge their patients using Welli. They will finance their patients using Welli. They will purchase their equipment, their scanners, or their, I don't know, doctor's chairs or whatever through Welli. And then they will keep their cash in a Welli account. I think that's incredibly ambitious, but that's what we're gunning for. And I'd say very especially we're able to do this at scale. I think going back to the previous point, Well is not a Colombian company. Well is a true Latin American company, and hopefully beyond that, right? I think one of the core criticisms that great entrepreneurs from Latin America constantly get is that we don't think global, right? So global is not Brazil. Global is why not Europe? Why not Asia? Why not the US?
So we're talking about the future here, but I want to talk about the past with a lens of reflection. Imagine I bring you back to Boston, and you're coming out of one of the classrooms at Harvard, where you're starting to think about making a better future and doing something of your own. And let's say you're able to stop that younger Felipe and give that younger Felipe a advice, one piece of advice before launching a business. What would that be, and why, given what you know now?
Great question. I'll give you, so one is tough. I'll give you probably like three. I mean, the first one is go all in. You cannot do successful entrepreneurship just dipping your toes and then working someplace else and then just like I'm gonna try to do this halfway. I think you have to go all in. I think that's definitely one. I think two, find a great partner. I don't know how people like solo founders do it. I wouldn't be able to do that. And then with my partner Felipe Jaramillo, we have very great complementary skills, and then that's made a world of difference. Um, and then probably the last one, which I think people always hear about, is just listen to the pain, right? I like that quote that most startups fail because they're solutions seeking or in search of a problem, and not the other way around. For us, from day one, and then we were lucky that this happened this way. We we found a problem that was palpable, that was painful enough for doctors and patients, and then that was big enough, right? We're talking about healthcare, probably the largest economic sector in every country. So we were lucky in that sense. I would say those would be my 3 points of advice.
Amazing. Well, Felipe, for the people that are listening that would love to reach out and say hi, what is the best way for them to do so?
I mean, one of the key learnings here is that as an entrepreneur, you should have every single conversation. You never know where a conversation might lead to, whether it's a partnership, whether it's an equity raise, or whether it's just giving back, right? So I think for us, it's been very helpful and meaningful that most entrepreneurs that we've reached out to have been eager and willing to help, right? So any way you can email me at felipe.gomez at welli.com.co, LinkedIn, whatever it is. I'm always eager to help people that want to take this rough but very very fruitful track.
Amazing. Well, Felipe, thank you so much for being on the Dealmaker Show today. It has been an absolute honor to have you with us.
Thank you, Alejandro. Thanks for having me, and a pleasure. I love what you guys are building and what you guys have done. So always happy to contribute any way.